Hello everyone, Neo the Gold Trader here. Today, Monday, November 11th, I conducted a live trade from 2200 hours London time. Starting with a $100,000 account, I successfully reached my goal of $1,007,004. So, I've decided to share this live trading session with you. My strategy involved a combination of counter-trend long positions and, primarily, selling at support levels and after breakouts. I used a 2-bar reversal in price action as my primary trigger. Today's market was relatively straightforward, so the focus was on strategically increasing position size at the right moments to steadily reach my target of $1 million. As always, my trading is based on Aki-chan's theories. However, today's market provided a clear directional bias. The key was identifying the 1-minute trigger, along with double tops, double bottoms, and whether or not the neckline would be broken. I also paid close attention to the reactions of horizontal lines, Dow lines, and moving averages on various time frames. Ultimately, the core principles remain unchanged. As I always emphasize, the first step is to set a clear goal. This is the fundamental premise, and achieving it is the top priority. In this case, my goal was to multiply my initial capital by 10 in a single day. Now, let's watch the 16x speed replay. Initially, it was a counter-trend long entry after a double bottom formed, following a new low after breaking the support/resistance level. The right leg was a strong bullish spike bar, which indicated a massive short covering rally. Given that there were 5 downward swings, the market had been consolidating for a while. Moreover, the blue trend line was clearly broken and retested, which suggested a reversal. Although I'm looking at the 1-minute chart, I'm primarily using it as a trigger. Naturally, I'm also monitoring the 5-minute and 15-minute charts simultaneously. I'm also keeping an eye on the hourly and 4-hour charts, as these time frames often see profit taking at the close of each period. Unfortunately, I missed the opportunity to take profit and ended up exiting at 122124. This was clearly a mistake. As the price hit the horizontal support/resistance level, I should have taken profit at the high. It was an embarrassing trade. I waited for the price to drop further and continued to monitor. After cutting my position, I entered another counter-trend long position as the price dropped significantly. I initially planned to take partial profits at 0.8 and add another 0.8 if the price dropped further. The price reacted to the line, so I added another 0.8, bringing my total position to 1.6. After consolidating, I thought it was time to take profits, but unexpectedly, there was a sudden sell-off and my floating loss reached 64,000. I regretted not having adjusted my position at a lower level. I should have waited for the typical pattern of a deeper pullback, followed by a sharp rally and profit-taking. I made too many mistakes and relied too much on higher time frame analysis. The previous profit-taking miss, and this trade showed that my trading had become sloppy. Since I had plenty of time, I may have become complacent regarding this long position. A strong bullish candle had emerged, hitting the MA20, and there was renewed buying after the retest, suggesting that some short-term long positions had been established. Therefore, I decided to observe it for a while. If the price breaks the neckline with a bearish reversal on the Dow theory, I plan to switch to a short position. As you can see, the price has been making higher highs and higher lows, establishing a trend. I'm counting the number of upward waves and the slowing of the uptrend. Initially, the price reacted to the upper channel line and pulled back slightly. However, considering the end value, which is not displayed here, the 5-minute 20 MA should also be taken into account. So, I wanted to observe it a little longer. Although the trend has turned upward, the momentum has weakened. I'm waiting for the buying to resume after the gap between the price and the moving average below is filled and the price breaks the upper line. The chart pattern looks like it's forming a saucer top, but the price hit the 20 MA and found support, so it seems like it's finally about to break through. Ideally, it would reach the 5-minute or 15-minute 20 MA, or even the green horizontal line. However, there have been almost no new highs. However, in such situations, large-scale long positions can suddenly enter the market, so I decided to wait a little longer. After waiting for a while, it seems that there is no new buying coming in. Since the uptrend seems to have ended, and I only have 200,000 yen left, I decided to exit my counter-trend position. Therefore, I exited the position with a balance of 221,637 yen. Given that the 5-minute 20 MA is acting as resistance, and we've seen 3 consecutive bearish spikes, I've entered 3 0.8 size short positions. Given my slightly improved capital situation, this indicates that the downward swing's retracement is complete, and we're now entering a more pronounced uptrend. Consequently, we can hold positions for a longer duration and at larger sizes. While significant reversals are always a possibility, trend following generally allows for a more relaxed mindset. Counter-trend trading, on the other hand, demands constant vigilance, as a delayed exit can quickly lead to substantial losses. However, with trend following, even if you encounter some floating losses, as long as your market analysis is sound, you can hold the position with confidence, knowing that the price will eventually return. That said, my approach to money management differs significantly from conventional wisdom. Even in uptrends, I often reduce my position size by half or even a third. Despite such aggressive risk management, I've developed the ability to recover through self-coaching and mental discipline. The light pink bars on the chart represent the 4-hour time frame. The current 4-hour candles are accelerating with bearish spikes, which further supports holding positions for a longer duration. Switching to the 1-minute chart, I'll take profits here as I anticipate a temporary rebound. This brings my balance to 359,751 yen, putting my 1 million yen target within reach. I only need to triple this amount to achieve my goal. I've added a build-up position and entered another short position with a size of 1.75 as selling pressure has resumed. I plan to add up to 3 more positions if the market continues to decline. Ideally, the price would continue to be suppressed below the 20 MA, allowing me to reach my $1 million target with this trade. However, the build-up was halted at the lowest point, forming a cluster. While I'd prefer for the price to break below this level, it's only been tested twice, so it could potentially form a double bottom. If the small double top's neckline is broken, it could lead to a reversal to the peak of the downward wave. If that happens, I'll have to cut my losses. I've drawn a downtrend line that intersects at 3 points, and I'll watch its reaction. This downtrend line also coincides with the neckline of the small double bottom. Even if it's broken once, a significant bullish move could occur if there's a reversal of support and resistance. However, since the price hit the 3rd point of the downtrend line connecting the high of the downward wave and the high of the saucer top, and selling pressure emerged, I decided to add another position. My total position size is now 3.5. However, the price quickly rebounded, so I took partial profits to avoid further risk. This is a risky situation where the price can quickly be pulled upwards. While I took a small profit of 365,941 yen, opportunities arise frequently, and it's not wise to hold onto a position like this. The neckline of the double bottom was broken, and the upper downtrend line was also broken. After forming a double top, a large bearish candle appeared, indicating selling pressure. So, I re-entered the market. The position size is the same as before at 3.5. If this buildup breaks down strongly, I'll consider adding more positions. I've switched to the 5-minute chart to monitor the price action, as the 5-minute 20 MA is acting as a resistance level. The chart pattern looks like an expanding flat, which is relatively common in gold. Ultimately, the price will follow the downtrend, which is the usual pattern. The price has now formed a cluster, but is struggling to decline. This is a pattern I'm least comfortable with, as the price often breaks out significantly after I take profits. However, it worked out well this time. It's crucial to take profits promptly if the price stalls, rather than being greedy. My balance is now 663,396 yen, and I only need 340,000 yen more to reach my target. I have a significant amount of leeway now. I'm going to speed up the playback to 4x from here as the market action is becoming quite volatile. I've entered a short position with a size of 6.6 lots, expecting a price reversal. Initially, I had a floating profit of around 200,000 yen, but profit-taking quickly emerged. Eventually, the price consolidated again. I'm waiting for an opportunity for the price to hit the resistance level twice. Based on the current chart pattern, I think it will take about 5 minutes for such an opportunity to arise. While waiting, I've been checking the charts for higher time frames. I'm particularly concerned about the 1-hour chart. The candlestick is a bearish spike low, but it's starting to move upwards towards a bullish candle. If it turns into a bullish candle, sellers will likely take a wait-and-see approach. Conversely, profit-taking orders will flood in and buying pressure will intensify. In that case, the waiting time will significantly increase. What was initially expected to be a 5-minute wait could easily turn into 15 minutes, an hour, or even 4 hours, leading to a change in phase. If that happens, I may need to readjust my strategy. At times like this, I need to organize my chart and consider how to secure the remaining 320,000 yen to reach today's target. I'll examine the FR and NVE theories, as well as the major support and resistance levels to identify potential take-profit points. As usual, I'll also analyze which time frame is currently driving the market, what's working and what's not, and remove outdated lines while drawing new ones. An opportunity has arisen, so I've entered 2 positions of 6.8 lots each, totaling 13.6 lots. This is a short-term, quick trade. However, the price immediately reversed, and my entry was premature once again. The 1-hour chart shows a bearish spike low, but it might turn into a bullish candle. I should have waited to see the outcome before entering this trade. This is a clear mistake. I've made too many mistakes in today's trading. With such a large position size, even a small price reversal can lead to significant losses. If my entry timing is poor, it can be fatal. My floating loss has reached a maximum of 250,000 yen. I need to reflect on whether my skills have deteriorated or if I become careless, leading to these trading errors. For now, given the large position size, I'll close at least one position when the price reaches my entry point to reduce the mental burden. Making mistakes can create a negative spiral, where one mistake leads to another. I've closed one position, leaving me with 780,934 yen, which has halved my mental burden. The other position also closed according to my scenario, and I was able to reach my target of 1,007,004 yen. However, the quality of my trading was poor. Although I didn't lose money, it's likely that I was simply lucky due to favorable market conditions. In such a market, even a beginner could have made profits, and my entry timing was full of mistakes. I was fortunate that the market was on my side. I apologize for showing you such poor trading. However, I hope you can learn from my mistakes. Thank you for watching until the end. If you found this video helpful, please like and subscribe. Goodbye!
Asterisk, the logic I've presented in this video is primarily based on Aki-chan Professor's FX videos. I've created a spreadsheet categorized by topic to help you systematically study his videos. It's available for free on Google Cloud, so if you're interested, please send me your Gmail address and I'll share the file with you. Thank you for watching until the end. If you found this video helpful, please like and subscribe. Also, I'm available to answer any questions you may have about gold trading on Discord. Additionally, I offer free Google Meet consultations every Sunday from 6 p.m. to 8 p.m. where you can ask questions about trading or discuss your concerns. Feel free to utilize this opportunity to improve your gold trading, not only in terms of technical analysis, but also brain and finance management. You can find the link to the Discord in the description. I look forward to seeing you all again in the next video. Please don't hesitate to join us.